Hey everyone, welcome back to your favorite podcast, Smart, Intellectual, Knowledgeable African. I'm Philippe S.I.K.A, and this is episode 33. This episode is particularly amazing because I'm coming back, bearing amazing news. As you noticed, my previous episode, I have been focusing on some of the groundbreaking innovation that are currently taking place in Africa. And today I am going to continue this trend, and I would like to discuss the recent, building of the world's largest oil refinery, which is actually taking place or which is actually being built in Nigeria by the wealthiest, African man, Aliko Dangote. And today we are going to look at this very interesting, groundbreaking news from an investment perspective. We want to focus on looking at actually the impact, such groundbreaking news may have on African investment and also on African investors. And for this amazing topic, I have a special guest. His name is Germinal Van, and some of you know him already. I invited him to discuss the symbolisms of, military juntas in Africa. And today, I'm happy to have him again to discuss, the investment impact of the recent, development that are taking place in Nigeria. So I'm going to give him the floor so that he can introduce himself for those of you who don't know him yet, and we will definitely take off. Germinal, the floor is yours.
Philippe, thanks for having me once again. I truly appreciate being back on the S.I.K.A Talk. My name is Germinal Van. I am a business owner. I'm an author, and I publish more than 24 books on economics and politics. And my last appearance, we talk about, as Jean-Philippe mentioned, the symbolism of military juntas, which create the controversy, which is what I was seeking actually, which created the controversy on this topic. And I'm glad to be back to discuss about the recent events regarding the oil refinery in Nigeria with Aliko Dangote.
Awesome. Thank you very much. Okay, let me do a bit of publicity, because this is a brand new podcast. Soon it will be now 1 year that the new version of S.I.K.A Talks, is running. And I just want to take, a few seconds to thank everyone for the support. And also to the rest of you guys, if you are not yet a member of our community of young intellectuals, you know what to do. I invite you to click on the subscribe button, to like, to share, to also comment this episode, and to make this community of young African intellectuals, keep growing. Well, I'm going to provide a bit of background, Germinal, as you know, because I'm not sure if everyone is familiar with this topic. But in the recent days, Nigeria has been making the headlines in a very positive way, which is very interesting also for the West African region, especially given the fact that, for the past couple of weeks and months, the West African region, has been making headlines in a very controversial way. I'm talking about, the coups in Mali, Burkina Faso, and Niger, and etc. So it's very refreshing, to talk about this region again and to have something positive, something, very brightening, to talk about. So I want to discuss about the oil refinery. It's a long-term project. To give you a bit of background, it started in 2013 actually. And when I say 2013, I'm talking about all the admin, that they had to do between the company, the government, and all, the key actors. And then the construction phase, started in 2016. So from 2016 up to now, which is roughly around 8 to 9 years, we were actually under the refinery, was under construction, and now the construction has come to an end. We now have a building that is sitting in the Lekki region, which is outside Lagos, and it's over 2,500 hectares. So just to give you some perspectives in terms of the sizing, it is the equivalent of almost 4,000 football fields. So if you are a fan of soccer, you can actually, imagine how large, the site is. And in terms of production capacity, it is one of the largest oil refinery in the world. And when I say in the world, this is pretty amazing because like for 28 years, Nigeria has not been able to refine its crude oil, production. Although the country, had 4 oil refinery existing back in those days, but unfortunately, none of them were working. So for 28 years, the country has been only exporting without being able, to refine most of the raw product, which is quite unfortunate. So to give you a bit of background, as I'm saying, Nigeria now has a refinery, an oil refinery, with a production capacity of 650,000 barrels per day, which is actually 200,000 over, or actually 200,000 more than the current capacity of the world's largest oil refinery, which is being owned by Shell, with a production capacity of 400, thousand barrels per day. So this is what I wanted to share with you in terms of the background. And now I'm going to give the floor to Germinal with my first question. Germinal, I know that you are a big fan of investment. You yourself, you are a business man. You own a company in America, and you also published a series of books, around economy and business topic, so that you can share your perspectives with your people. So what do you think of, this oil refinery? What do you think of it in terms of the production? What's your thought on it? Do you see it as a good news for the continent, or do you think it's still insufficient for Africa?
It's a great start, as a matter of fact, because the fundamental reason Africa is still lagging, specifically sub-Saharan Africa is lagging, is because we're still relying on rentier economics. In French, we say l'économie de la rente. And rentier economics relies on 3 factors. The economy relies on a source that is completely independent, that was not created by man. Number 2, it has a very weak domestic, not domestic, but private, a very weak domestic private population that actually produce things. That's the thing. That's number 2. And number 3.
Sorry to interrupt. So you mean the private sector, right?
Yeah, the private sector, it's pretty weak. Yeah, the productive capacity is very weak. That's what I was looking to say. Finally, I got my words. And the third is that the government is the first recipient of the revenue within that economy. So let me give you an example. When, for example, Ivory Coast, we love to talk about the Ivory miracle in the 1970s. But why we talk about the Ivory miracle, and we credited President Houphouët-Boigny for that. But Houphouët-Boigny didn't do much, if you think about it. Why? Because we relied on cocoa. We didn't create cocoa. We were just lucky, or should I say blessed, to be living in a land that has cocoa. And at the time when that happened, the price of cocoa was really high because of demand. European manufacturers wanted to produce a lot of chocolate. So the price of cocoa as a commodity increased. And because the price has increased, so we sold more of it, we generate a lot of revenue. And who was the first recipient of that revenue? It's the government. That's one of the reasons why, up to today, African countries still do not refine or transform their own raw materials. And when it comes to Nigeria, as you say, Nigeria for 28 years has been exporting crude oil. while it has 4 refineries, why Nigeria could not refine its oil? Because the oil sector was nationalized, number one, by the government. And the funny thing is that when you actually refine or when you transform your commodities into finished product, you actually sell more. Why? Because when you transform, first of all, you create a lot of jobs for the local population. So the productive capacity of people increase. You create a lot of jobs, so you reduce poverty. And number two, you have you can bargain at the negotiation table because you transform the thing and then you sell it to whoever. Now the person or the organization you're selling to does not have the upper hand in the negotiation. But when you sell the commodity as it is, you do not have the upper hand, right? You sell it, whoever is buying it is saying no, like, it's just basically without us transforming your commodity into a finished consumable product, your commodity is nothing. And it's true. For example, crude oil in itself, what can you do with it? Nothing. Crude oil becomes useful because you transform it into kerosene, into
into petrol,
into oil that to build roads and so on and so forth. Right? Exactly. So it's the refinery that actually has the real power of oil. So the Nigerian government for 28 years made a lot of money exporting oil and not refining, because the bureaucrats, the government bureaucrats, they're the one enjoying they're the one receiving all the revenue from the oil exportations. And now they did not really redistribute that same revenue across the population. Let me take the example of Arabian countries, right? Saudi Arabia or even the Emirate or Dubai. Those guys also do rentier economics. The only thing they rely on is oil. But what is the difference between those countries and our countries in Africa? Is that when they sell the oil, they use the money to actually redistribute across society through programs, education, and so on and so forth. And that is why those countries are very advanced. Although the productive capacity of private citizens in those countries remains weak because the main source of income for those countries is the oil, and they didn't create oil. The same happened in Venezuela. In Venezuela, they completely mismanaged the funds. They didn't diversify. They rely on oil, and that's it. And eventually, because they mismanaged the fund, we saw how the Venezuelan economy collapsed. But, that's another topic. So my point is to say that we need to, what Aliko Dangote is doing is great because he's trying to break the cycle of the rentier economics. We need this is what has imprisoned African countries since the independence, because we do not transform our raw materials into finished products, and governments do not want to transform that, because if they give it to entrepreneurs, government is losing. Because if, for example, we say, okay, S.I.K.A, you can create your own oil refinery and then sell it to whatever manufacturer you want or to whoever you want. Now the government is pretty much out of the way. So the revenue you will generate from the sale of the oil will not go to the government, but to you specifically. The government doesn't want that.
Yeah, I mean, okay, so I hear you, and this is really interesting. Out of the comment you just made, I have two questions actually. I would need some clarification. In your previous analysis, you said that one of the problem with the rentier economy is based on the fact that most of the revenue, is going to the government. So my first question is, how is that possible? Because we do have farmers that are actually, producing those raw resources. And I mean, to give an example, when looking at the cocoa industry in Cote d'Ivoire or the cashew nuts industry in Senegal and even in Cote d'Ivoire, like all these natural, products are actually being developed and cultivated by farmers, which means somehow they also earning some sort of money, from the production, although maybe the largest share of the money may actually go to the government. When it comes to crude oil, the context is slightly different because I know that there's a legislation in Nigeria, and I don't know if they amended the legislation, but according to the previous legislation, crude oil is not something that could be owned privately. Like if you have a land and you happen to find oil underneath your land, that obviously it belongs to the state. It cannot be your private property. So I would like you to try and explain, to us how exactly, the exploitation, of natural resources does not benefit to the private citizen, but only or mostly to the government. And then my second question is also to look at the privatization aspect you mentioned. You say, for example, that if I were to own a refining company, a refinery, most of the money, that I will be, making from refining the crude oil will now no longer go to the government, but instead comes to me straight, which is true. But in my opinion, I believe that the government is still making some benefit because as a company, I will have to pay tax. And when talking about tax, there are various aspects and various level of taxes that, a company or corporation pay. You pay tax on profit, you pay tax, based on the number of employee that you have. You also pay tax based on the material that you're using, to actually like, operate or perform your work. So these are my questions. Like, can you try and tell us exactly how all the various, aspects do not benefit the private sector, but tend to benefit mostly the government?
Sure. So to answer your first question, so how the revenue generated does not benefit the private sector? Well,
Yes.
it doesn't because number one, when you look at specifically the way African governments negotiate contracts uh, with foreign manufacturers,
Mhm.
usually foreign manufacturers have between 70 and 80%, and then the African government gets 20%. And then within those 20%, now they decide how much they want to allocate to, to the population. And that's why now it depends on the willingness or the will of the government to do good by its people. When we look at the case of Ivory Coast, for example, when you say that the you have the peasants that the farmers that actually produce the cocoa. If you think about it, they didn't really do much. They have a machete, they go in the farm, they cut, and then that's it. And then they ship it to the port, and then they export it. And basically, those farmers were making pennies on the dollar. That's the thing. They did make, and if you notice, they always complain about the fact that, oh, our farmers are not well paid. They're doing all the work, and they get nothing. And it's true because the government is the one that receives first the money. So when they receive first, they're the one who decide how they want to allocate that. If they want to pay the farmers the fair share. Now, when it comes to Nigeria, number one, you said that if, for example, oil is found in on someone's land, the state owns it. Who gave power to the state to own that land in the first place? That's number one. Number two, even when let's say the state owns it, right? But the state has refineries. You mentioned the state has 4 refineries. Why the state didn't try to refine that oil before selling it to the global market?
Yeah, that's a good question. That's the question everyone is asking,
Yeah, exactly. Because there's an incentive here. Because if they do, they will not they will not get the revenue that they expect. It is easier to make money for the state by exporting the raw material, the commodity itself, rather than transforming it. Because transforming it will require additional cost
Yeah.
before sending it. That's the thing. And that doesn't, but that would actually profit to people better because when you transform it, when you create refineries, when you create factories, you employ people. you lift people out of poverty. These are people that you are pretty much giving um you are giving a salary to, a wage to, so they can have a decent living. But it doesn't do that. And on top of that, the Nigerian government is known to be notoriously corrupt, right? With the mismanaged. If you look at the way the oil industry has been in Nigeria, it has been mismanaged for a very long time. So Dangote here wants to shape things, and importing will help exporting refined oil will help Nigeria, because it will make the consumption of oil cheaper for Nigerians. Because that's the thing. When you sell something as a raw material, as a commodity, they transform it for you, and then they resell you that very same thing at a price that is 3 or 4 times, even 10 times higher than the price of the commodity itself. And that's why imported goods are so expensive. But if they transform it first and then they sell it to the global market, the first people to benefit from this would be the local people in the first place, before even the global market benefits from it. That's the thing. So that's the way to redistribute. That's the way to make the private citizens enjoying the fruit of their labor. But it doesn't happen. And do you mind repeating just your second question, because I think I extrapolate on the first one.
Yeah, no problem. My second question, I just wanted to understand. I think you've already touched base on my second question, because I wanted to understand exactly how it is non-beneficial to government to actually industrialize the sector.
Yeah.
And what you just said, you actually pointing out on the fact that it will cost more money to the government to actually invest into refining, crude oil, while knowing that even though they are not investing, they will still be able to collect revenue from exporting the raw material.
Yeah.
So in another way, or somehow, it may seem that, like African government are always choosing the easy way out instead of the hard way out, which is obviously going to demand more and additional effort in order to benefit, the larger market, which is definitely, rational and relevant.
Yeah.
Coming back to the refinery and the investment aspect of it, I personally believe that this is also a good news, for Nigeria and also for the rest of Africa. But remember, in the introduction, I was saying that the investment costed over $20 billion. So I don't know if I said it, but like now I'm saying it, overall, the investment costed $20 billion, of which the Dangote Refinery Company Limited borrowed $5 billion, which actually represent 25% of the overall cost of the project.
Yeah.
So it is actually safe to say that investing into like industrialization, is definitely costly.
Yeah.
So, which means also that it is not open to everyone. Like, if you want to actually shape your economy, if you want to move from, being an exporter of raw material into becoming, a producer of, end product, you now have to invest additional money.
Yeah.
And looking at the Nigerian example, this oil refinery costed over $20 billion. So how many countries in Africa can actually risk investing that kind of money? That's the first question. And then second question, how many private investors on the continent can raise that kind of money? So don't you think that the issue around access to finance is also one argument that is actually like rendering the investment a bit difficult?
In In Africa, one of the issues regarding financing is that we have a problem with credit. Banks don't easily loan money to African entrepreneurs. What uh, Olusegun Obasanjo did, and one of the reasons why I personally believe that he was a good president, was because he focused on creating permissive laws that would facilitate access to economic resources, notably credit, and create local champions. Because we always talk about the concept of local champions, and Nigeria and perhaps South Africa or Southern African countries are the ones that kind of have local champions. Maybe Kenya does too. But other countries don't have like a class of local champions. When you look at African billionaires, they're usually Nigerians and South Africans.
Yeah.
Exactly. And in the case of Dangote, right? So the reason why Dangote was even able to invest $5 billion, to take a loan of $5 billion into the project in itself, was because it's because of trust. People know who Dangote is. We know what he has already accomplished. He's a billionaire. So giving him that kind of money is no problem. But for the entrepreneur who has the same idea, but is the nobody and wants to have access to financing, it's going to be hard because there are laws in place that make it hard to have access to credit. That's the thing. Like banks in Africa are very reluctant to give money to entrepreneurs. And so one thing that I see starting growing is the emergence of venture capital. Because normally when you want to start a company, you don't start with debt. It doesn't make sense. No bank will give you credit when you just start a company. A bank will give you credit maybe after 2 years of operations. Why? Because you've been generating revenue. They can look into your books and see how profitable your company is, and based on that, they calculate the debt ratio and see if you're solvable or not, or if you're solvent. My bad. If you're solvent or not. So that's the point. So normally, when you start a company, what you want to do is to start with equity. You have an idea, but you don't have the money. But so you go to people who have the money. Even those who have the money, they may not have all the amounts, so they gather together and they create a fund to give you the money that you need. That's what we call venture capital funds. In the United States of America, that's how most of the companies that we know about started. Facebook, all the tech companies that we know, they go see private investors. They say, "Hey, Jean-Philippe, like I have this project. I want to start it. I need, I don't know, like 250,000." And then let's say you may not have the 250,000, but you may know some friends who have, and who may have the money. Say, okay, me, I'm going to put 10,000. And then you go see two or three friends, and then you guys collect all the money together. And then you say, okay, this is the 250,000. We give you that in exchange for, I don't know, 25% of your company. And then with that money, they use it to now engineer production. And then after 2 or 3 years, now the company can afford taking loans at the bank. No sane bank will give you a loan from the very start of the company. So the reason why they gave Dangote that money is because Dangote is already known. He already has the money himself. He's a billionaire. He has assets. So banks feel comfortable with him. And one thing to understand about banks is this: banks doesn't like poor people. The poorer you are, the more they're going to make it hard on you to have access to credit. But the richer you are, they're going to give you very low interest rate. They will treat you like a prince. But if you're a common man, they will give you very harsh interest rates. They're going to make it hell for you. So, and because banks make their money through interest payments, that's how they make their money. So that's why the banks don't give loans to startups. The Dangote refinery is not really a startup. As I say, we all know Dangote, his reputation. We know his reputation. $5 billion is a lot of money, so he probably got like a secured line of credit. So he probably put some of his other businesses from some of his other assets from his other businesses as collateral get the loan and then start off. Uh, so to finally, to not to answer, I've kind of answered your question, but to summarize, what needs to happen in Africa is now the growth of venture capital. We need to believe more in equity financing rather than debt financing. So for any young African man or woman who has an idea, wants to start a business, write a business plan. The business plan shows that you're serious about your project. Make your projections. We know the projections, things may not go according to plan. But when you write a business plan, you make your projections, and then you show that to people who you believe can invest in your thing, people will actually be willing to. Even if you go see someone and that person doesn't have the money, he can talk to other people and then they can gather together and get the money for you to start off your project. So we need to get out of the mentality of debt financing and get more into equity financing, because equity financing is the method that is used mostly in the United States. That's why you have, again, companies like Facebook, Twitter, all the tech companies that they all start with equity financing. All of these guys who started didn't have money. And the reason why they got so rich is because they have like venture capital companies, which are literally they're created just for that, to invest in startups. That's literally what they do. Sometimes they invest, you don't even have a product. They invest in the idea. Look how risky that is. So we need to increase our risk appetite, I would say, in Africa. And that's one of the things that is still holding investments when it comes to building companies in Africa.
Yeah, no, I definitely agree with the last one, the risk to increase the necessity to increase our risk capital on the continent. Because I mean, coming back to the Dangote case, like I was saying, the overall project cost was over $20 billion. But out of the $20 billion, he only got $5 billion, as loan, which represent just 25%. But like if we are looking at the international standard, or like the normal trend when it comes to financing project, usually it's like 10% equity finance and 90% debt finance. But in the Dangote case, we have a 75% equity finance and 25% debt finance. But I think which is kind of good, because Aliko Dangote is a rich man, like you said. His reputation precedes him. He can literally have access to anything. But I think the other narrative that we should also learn from it is that even for someone like Aliko Dangote, it has not been easy to still access loan from the banking sector. Which in my opinion is a bit sad, because like based on the fact that I'm Aliko Dangote and I've already proven, that, I'm a reputable investor and businessman. I also have like assets that I could use as collateral. It's still difficult, to raise 90% to even 100%, like debt finance. And I hear your point on venture capital, but I think in Africa, venture capital in the United States are actually made of insurance companies, pension funds. You also have like group of private individuals, wealthy private individuals, philanthropes that actually, like get together and create, those kind of company. But in my opinion, I think it all boils down to already having a conducive investment environment. I think that it's not easy for Africans themselves to invest in Africa because of, first, the challenges around access to capital, and second, the challenges also that is existing in the environment. Because even if you are a successful person like Aliko Dangote, you can still not rely on the banking sector. You have to rely on yourself, which means that you need to have an existing business, or you need to have your personal asset that you are willing to put on the line in order for you to, like jumpstart your project, which is very detrimental, because in America, like you said, you will still be able to find financiers who are going to invest just on in your ideas, without you having a product. So I think it's really like very, very, we need to be very careful, because I mean, I don't know, maybe you have something to add on this point.
No, your point is true. Your point is valid because again, it's a culture. It has to be something cultural too. The reason why like venture capital is so widespread in America is because it's a cultural thing. Today, anyone can start an app. You build a business plan around that app. You go present it to one or two friends who have deep pockets, and they fund you like this. Back home, we haven't developed the culture of equity financing. Because I think if we develop the culture of equity financing, we wouldn't rely on debt financing anymore. We've always look at the bank. We always look at like, oh, if I want to start a company, I need to get a loan from the bank. But the loan from the bank actually holds you back because you have to pay back that loan. That's the key. That's the thing. Equity, you don't have to pay anything. The investors take the risk with you. If the company is successful, everyone is a billionaire. If the company fails, everyone loses. So equity financing is actually harder than debt financing because debt financing, regardless of how the company is doing, the lender needs its money. Doesn't matter. That's why personally I don't like debt financing. I would personally, if I can avoid debt financing as long as I can, I would do it. Because the whole point where you have to take it, because the revenue, when you're in business, revenue are never static. They fluctuate. There are months where your revenue peaks and you feel like you're the king of the world. And the other months where your revenue is completely down, you feel like the world hates you. And regardless of what happens, you have to pay that loan back. That's the bottom line. So, and if you cannot pay the loan back, the bank is going to come and seize your assets. It's very risky. So, but if you have a company that has been in business for a long time, generate massive revenues, profitable and everything, you can get a loan. And the thing with loans is that if you want to get a loan, make sure that you have 10 times the amount already on the side. So let's say if you want to take a loan of $1,000, make sure you have like $10,000 in your bank account, so that you don't feel it. But if you actually don't have the money and then you go take the loan, you're gonna sweat to pay back those $1,000. And that's the thing that people don't really grasp around debt. Taking the debt is fine, but you need to know why you're taking the debt, where you invest that debt, and if you know that you have the money to pay that debt back.
Yeah, thank you very much. I think we are reaching the end of the first part of this conversation. I think overall, what we can actually learn as the key takeaways first, that the new or the recent, the newly built oil refinery from the Dangote company is definitely a success. It's definitely groundbreaking and something that all Africans can be proud of, especially Nigerian. So kudos to Nigerian, and kudos particularly to Alhaji Dangote. I like his name. This Alhaji name, it sounds very African, very fatherly, and I really like it. So congratulations to him, and this is really good. And I think another key takeaway that we should also get from this first part is that investors in Africa, regardless of their caliber and regardless of their achievement, are still facing, tremendous challenges when it comes to access to investment, to finance. And Germany now has offered some very, interesting and very original, ways of accessing, finance and like trying to go beyond the bottlenecks, that every entrepreneur may actually find out. I hope you've enjoyed this first part. We personally did, as always. And remember, S.I.K.A Talks is your podcast where strong realities meet powerful perspectives. Thank you, and à bientôt.